To other news now, stock markets around the world have dropped sharply amid fears the US economy could be heading for recession. Japan's Nikkei share index plunged more than 12% at the close today, its biggest fall since Black Monday in October 1987. Hong Kong's Hang Seng fell by 1.5%. In the UK, the FTSE 100 is currently down just a shade over 2%, and in France, the CAC 40.
The recent sell-off in global stock markets has been nothing short of dramatic. U.S. indexes, particularly the Nasdaq Composite, led the losses, with the sell-off initiating in Japan. The Nikkei 225 experienced its worst one-day decline since 1987, dropping over 12%, and the panic quickly spread to Europe and the U.S. This global wave saw investors offloading riskier assets en masse. In the wake of a tumultuous market week, Nvidia, NVDA, shares have taken a significant hit, contributing to a broader sell-off in the tech sector. As we analyze the key factors affecting Nvidia's stock, the question arises: will Nvidia recover again? Let's dive into the details and forecast NVDA's stock price trajectory. Tech stocks hit hard. Tech stocks bore the brunt of this sell-off, with Nvidia, Meta, and Apple each dropping more than 4%. Apple's decline was particularly steep, due to Berkshire Hathaway significantly reducing its stake in the company. Nvidia was not spared, falling over 6% on Monday and contributing to a staggering $650 billion valuation loss among the Magnificent Seven stocks during this market plunge.
With Nvidia, those shares are down nearly 6% as investors continue to worry over the return on investment for AI spending.
The sell-off was fueled by mounting economic concerns. A sharp slowdown in job growth in July intensified worries about a slowing U.S. economy. Investors are increasingly anxious that the Federal Reserve has been too slow in cutting interest rates and now faces the challenge of catching up. Market volatility skyrocketed, with the VIX, Wall Street's fear gauge, experiencing its largest intraday percentage gain ever. This was coupled with significant declines in Japanese stocks, notably SoftBank and banking stocks. Additionally, the yen strengthened against the dollar, amplifying the ongoing trade trend and adding further pressure on global markets. Nvidia's specific challenges. Nvidia's recent performance has been under particular scrutiny. On Monday, Nvidia shares fell over 6%, adding to a broader decline of about 20% over the past month. This sharp drop has been exacerbated by market volatility and concerns about the financial impact of Nvidia's heavy investments in artificial intelligence. From July 17th to August 5th, 2024, Nvidia's stock exhibited notable fluctuations. Starting at $121.35 on July 17th, the stock saw various highs and lows, peaking at $104.69 on July 23rd, but gradually declining to $145 by August 5th. Volume traded remained substantial throughout the period, with the highest volume of 549,739,200 shares on August 5th and the lowest at 173,911,000 shares on July 23. Despite opening at $92.06 on August 5th and reaching a high of $103.41, the stock closed at $100.05, reflecting a volatile trading period influenced by significant market activities and investor responses. Adding to the intrigue, Nvidia CEO Jensen Huang sold a substantial portion of his shares, totaling nearly $500 million this summer, with $322.7 million sold in July alone. These sales were part of a predetermined trading plan established in March. Huang's timely transactions allowed him to avoid the broader tech sell-off that accelerated due to weak economic data and disappointing tech earnings. Huang's actions are part of a larger trend within Nvidia, where insiders have sold over $1 billion worth of shares this year. Since 2020, Huang has sold off $1.4 billion of his stock and plans to continue selling into August. This widespread insider selling adds to the pressure on Nvidia's stock. Global market dynamics. The recent global market corrections can be attributed to three major factors: recession fears, concerns over an AI bubble, and the unwinding of a major carry trade involving the Japanese yen.
A little earlier, down by more than 5.5%, but the broader market, the S&P, it's going to go closer to where the Australian market is, so down by more than 3%. And the Dow futures of the top 30 companies in America down by 1.2%. So, look, this is a fairly significant event as to what's taken place around the world today, but particularly in Asia, and just what the knock-on effect. I should also mention to you,
Economic indicators like a slight increase in unemployment and the Federal Reserve's decision not to cut interest rates despite a slowing economy have raised recession concerns. Massive investments in AI by major tech companies have raised doubts about the returns these investments will yield, despite AI's potential as a transformative technology. Japan's decision to keep interest rates low to avoid deepening economic woes facilitated a global carry trade. The recent unexpected rate hike by Japan disrupted this trade, leading to a market sell-off as traders scrambled to cover yen shortfalls. It's important to note that a 10% correction in the S&P 500 happens fairly frequently, with a 64% chance annually. Thus, market downturns should be viewed as normal rather than catastrophic. Nvidia's recovery potential. Despite the recent turbulence, Nvidia's fundamentals remain strong. The company continues to be a leader in AI and graphics processing technology, sectors poised for long-term growth.
That AI has been so deep in your company, you've been building GPU infrastructure, running these large recommender systems for a long time. Now you're
a little slow on it, actually, getting to GPUs.
Yeah, I was trying to be nice.
I know. Well, too nice.
I was trying to be nice,
Well,
you're my guest.
When I was backstage before I came on here, you were talking about like owning your mistakes or something, right? So
you don't have to volunteer it out of the blue.
I think this one has been well tried.
Yeah,
it's like I got raked over.
But
the
as soon as you got into it,
as
soon as you got into it strong. Let's just put it. There you go. There you go.
That's how we roll.
Now, the thing that's really cool about generative AI is these days when I use WhatsApp, I feel like I'm collaborating with WhatsApp. I love Imagine. I'm sitting here typing, and it's generating the images as I'm going.
Yeah.
I go back and I change my words. It's generating other images.
Yeah.
And so the one that old Chinese guy enjoying a glass of whiskey at sundown with 3 dogs, golden retriever, golden doodle, and a Bernese mountain dog. And it generates, a pretty good-looking picture. Yeah,
yeah, we're getting there.
That's me.
Every month.
Yeah.
Getting better.
And then now you could actually load my picture in there.
Yep.
It'll actually be me.
Yeah, that's as of last week.
Super excited about that.
So now imagine me. I'm spending a lot of time with my daughters, imagining them as mermaids and things over the last week. It's been a lot of fun.
While short-term volatility is expected, Nvidia's strategic positioning and innovation in high-demand technology areas provide a solid foundation for recovery. In conclusion, while Nvidia has faced significant challenges recently, its core strengths and market leadership in key technological areas suggest potential for recovery. Investors should remain calm, considering the broader economic context and Nvidia's strong position in the tech landscape. As market conditions stabilize, Nvidia is well positioned to regain its footing and continue its growth trajectory. Stay tuned for more updates and analysis on Nvidia and other tech stocks. Don't forget to like, comment, and subscribe for the latest market insights.